Hello traders, you're welcome back to the channel. In this video we are going to be looking at one of the most used indicators in the forex market, and that is none other than the Fibonacci tool. Okay, now we're going to be looking at a Fibonacci reversal strategy. So whether you are new to Fibonacci or you've been experimenting with it, now this video will take you through everything you need to know to start using it effectively to identify potential reversal points. All right, let's start with the basics. Now, the Fibonacci sequence is a mathematical concept that appears all around us in nature. Okay, so perhaps if you are new to Fibonacci and you don't exactly know how it even came about, now it is a concept. It's a mathematical concept. Okay, that appears all around us in nature. You can also decide to do a Google search. You can just do a little search about Fibonacci, and you're going to see more details about scenarios where Fibonacci applies in nature. Okay, now, but in forex trading, we use Fibonacci retracement and extension levels as potential support and resistance points. All right, these levels are calculated using percentages like 23.6. Now I'm just going to add a Fibonacci retracement just randomly so we can look at that. So the Fibonacci levels uses percentages like 23.6%, 38.2%, 50%, 61.8%, 78.6%, and so on. Now each of these levels gives us insights into where price might pull back or reverse, allowing us to plan our entry and exit points more precisely. So why do traders focus so much on these levels? Well, these Fibonacci retracement levels work because they reflect key points where market psychology comes into play. Many traders place buy or sell orders around these levels that you can see around these levels, causing price to respond strongly to them. So if you're watching for price to retrace to these levels, is a great opportunity to enter a trade with the trend. All right, remember that the trend is your friend. Okay, so let's take a look at a real example. Okay, now let us identify the trend. First of all, we can see that we are in a strong buy trend. Gold has been buying for long, has been on a bullish streak for quite a while now. Okay, so using the Fibonacci retracement tool, we're just going to look at a very practical example here. Okay, so now this is our point A and this is our point B. Now because this is a bullish trend, so we draw the Fibonacci retracement tool from here. This is our starting point and this is our end point, right? Because we are using this tool to target the possible end of the pullback. Okay, we're using it to target the possible end of the pullback. So we can see that the price of the asset pulled back to the 23.6% zone. Can you see that it's perfect? It pulled back exactly to the 23.6% before it now began to go back up. So if we had drawn this Fibonacci retracements before this pullback happened, once the price got to this level and began to give signal for a bullish continuation, we would have just entered a buy trade, because this 23.6% level is also a key level for reversal. Same with all these other Fibonacci levels. So after we got this bullish candle, we would have considered entering a buy trade here and perhaps setting stop loss right under the Fibonacci level, and then our take profit could have been at either the zero level. You can use the zero level as our take profit. Yes, the zero level would have been a good point for take profit, or we can just allow because it is a strong bullish trend, we can allow the trend to continue while our buy position is open, but then we have to be watching out for key bearish candlestick patterns to use to exit our buy trade. Now, Fibonacci on its own is powerful, but pairing it with other indicators makes it even stronger. For example, you can try combining the Fibonacci with, you know, with trend lines, like I did here. The trend lines can help you identify the direction of the trend. You can also combine it with moving averages as well, for additional confirmation. You can also combine it with momentum indicators such as the stochastics, for example. It can also add to your confirmation. Perhaps when you get a signal from the Fibonacci like we did here, we can see that after the price got to the 23.6 level, around that same point, the moving average hinted that the buy is about to continue. You can see that the price was bouncing off the moving average. That served as an additional confirmation. And then looking at the stochastics, can we see that the stochastics also served as an additional confirmation because it was around the oversold zone and pointing upward. So you can see that we got multiple confirmations around that point. Okay, and speaking of confirmation, pay attention to candlestick patterns near these Fibonacci retracement levels. Perhaps if you find a bullish candlestick pattern in a bullish trend, after the price pulls back to one of these levels, that is also an additional confirmation. Okay, remember, it's all about stacking probabilities in your favor. All right, now here is a quick checklist when using the Fibonacci reversal strategy. Okay, this is basically targeting reversals or pullbacks. If you're using the Fibonacci retracement tool, basically you want to be looking out for pullbacks or reversals. Okay, so first of all, you have to identify the trend. The Fibonacci works best when applied to clear uptrends like this example, or downtrends. Now you have to draw the retracement levels from the last swing low to the swing high in an uptrend, like we did here, from this swing low to the swing high. That's for an uptrend, or vice versa in a downtrend. Then you can look for a confluence. If the Fibonacci level aligns with support or resistance or other indicators, like we see it aligned with the moving average and the stochastics, it adds weight to your analysis. Then you can also watch out for candlestick patterns at those levels as well for confirmation. So that's it. The Fibonacci reversal strategy is an amazing way to refine your entry and exit points. Give it a try, and remember, practice makes perfect. If you found this video helpful, hit that like button and subscribe for more in-depth Forex strategies. And let me know in the comments, do you use Fibonacci in your trading? I'd love to hear your thoughts. Thanks for watching, and I'll see you in the next video.